Hi everyone, welcome to this week's episode of Forbes Flash. Let's get started. Federal Reserve Board economists have developed 3 separate ways to gauge trade policy uncertainty, and by all measures, things aren't looking good. The Fed Board researchers found, quote, all measures suggest that uncertainty about trade policy has recently shot up to levels not seen since the 1970s. The Fed Board research is timely. Fed officials justified their July reduction in interest rates on the basis of an increasingly uncertain outlook, in large part due to the U.S. trade war with China. Wednesday, President Donald Trump attacked the Federal Reserve in a series of tweets, blaming them for a slowing economy and urging them to cut interest rates to zero or even lower than zero. Speaking of which, have you ever wondered how tweets affect your stock market investing? In the past 19 months, the Dow Jones has barely moved. However, in terms of daily point moves, it has gone around the world 3 times, traveling fully 75,000 points, with a lot of that being driven by President Trump's tweets. But that huge number understates the large tweet risk, the effect from tweets made during non-trading hours. Tweet risk comes from those unsettling surprise announcements coming from the White House during after-hours trading. Many tweets throw sudden new information into the mix that may or may not result in dramatic changes. President Trump's tactic of tweeting provocative, market-moving messages has produced no real long-term movement in the stock market. However, it has produced both large stock market volatility and investor confusion and concern. One place where there isn't as much confusion? Bitcoin. In August, Bitcoin prices did not suffer any wild price swings. The digital currency did experience some gains during the month, rising more than 20% in the first week, when its price surpassed $12,300. The cryptocurrency started moving higher after President Trump tweeted his plans to impose additional tariffs on China and received a boost when the Chinese yuan reached more than a 10-year low against the US dollar. Disgraced hedge fund manager Raj Rajaratnam is out of jail with 2 years left in his 11-year prison sentence for insider trading, and it's in part due to Kim Kardashian. Rajaratnam was released to house arrest in New York City in July due to the 2018 First Step Act, which was signed into law by President Donald Trump in December and grants non-violent criminal offenders, specifically ones convicted for drug charges, early release from prison if they are over 60 or if they have a terminal illness. Rajaratnam qualified under the First Step Act due to his age, he's now 62, and his health, as he's reported to have advanced diabetes. Last year, Kardashian lobbied President Donald Trump to pass the First Step Act as part of her foray into criminal justice reform. In 2009, Rajaratnam was estimated by Forbes to have a net worth of $1.3 billion, which placed him among the 400 richest Americans. That same year, he was busted for insider trading, with prosecutors claiming he made more than $72 million doing so. Legendary energy tycoon and hedge fund manager Boone Pickens died at 91 this week. Throughout his life, he was a major philanthropist, but after he donated $11 million to the University of Texas Center for Brain Health in 2006, he let Forbes staff writer Christopher Hellman ask him a series of questions during a brain scan and allowed Forbes to print the subsequent MRI images in the magazine. Much to his doctor's astonishment, the scans pointed to part of the secret of Pickens' success, a brain about 30 years younger than his physical age. His brain activated in places that young brains activate. Forbes ranked Pickens as a billionaire in 2013, but he soon fell off the Forbes 400 list of the wealthiest Americans. At the time, he tweeted to his more than 110,000 followers, "Don't worry, at $950 million, I'm doing fine. Funny, my $1 billion charitable giving exceeds my net worth." His quick wit will be missed. As an author of the book The First Billion is the Hardest, and a Forbes contributor, he enjoyed sharing his Booneisms and imparting knowledge upon young entrepreneurs. Jack Ma, the Chinese billionaire who founded e-commerce giant Alibaba 20 years ago, officially stepped down as the company's chairman on Tuesday. China's richest man spent his final day at the helm of Alibaba celebrating his 55th birthday. His next chapter will be to pivot from the business world to improving education through philanthropy, following the footsteps of Bill Gates. Ma would rather appropriate the earnings he's made from Alibaba to positively change the education system in China, instead of handing it to investors or banks. Ma is a prime example of a rags-to-riches story. After many early setbacks, Ma, along with a scrappy team of 18 people and $60,000, co-founded Alibaba in the city of Hangzhou in 1999. 20 years later, Alibaba, one of the largest retail and e-commerce companies, boasts over 101,000 employees and a market value of about $420 billion. Ma has an estimated net worth over $40 billion. In his farewell speech, Ma discussed issues ranging from macroeconomic challenges, as well as how future technologies such as 5G and data sharing can have a fundamental impact on the business world. Quote, "There are a lot of wrong things and undesirable things in this world, and I think I can make an impact," Ma said. "Stepping down is not equal to retirement. I won't stop. Alibaba is just one of my many dreams." 2 new billionaires have joined the 3 Comma Club, both alum from our Forbes Under 30 list, and also now 2 of the youngest billionaires in the country. The Nashville-based company, Smile Direct Club, which sells plastic teeth aligners online and at over 300 stores, priced its shares at $23 on Wednesday evening, above the $19 to $22 proposed range. That gives the company a valuation of $9 billion, up sharply from the $3.2 billion it was valued at 11 months ago in its latest funding round. Smile Direct Club co-founders Jordan Katzman and Alex Fenkel, both 30, will hold a stake valued at $1.6 billion and $1.5 billion, respectively, following the IPO. Tuesday, Apple held its annual keynote event and announced a flurry of new products and platforms, including a new generation of iPhone with 3 back cameras and the Apple Watch Series 5 with an always-on mode. But the biggest announcement may have been the new Apple TV Plus, which Apple CEO Tim Cook says will only cost $4.99 a month. For comparison, Disney Plus will cost $6.99 when it launches, and Netflix's most popular plan costs $12.99 a month. Shares of both Netflix and Disney dropped following the news, with Netflix taking a 3% hit and Disney taking a 2% hit. Disney's new platform, Disney Plus, is set to launch November 12th, less than 2 weeks after Apple TV Plus is set to launch. To add insult to injury, Apple also announced that new purchases of iPhones, MacBooks, and Apple TV devices will get you 1 free year of service. Apple has reportedly already invested more than $6 billion in new programming and has brought along industry favorites such as Oprah Winfrey, Jennifer Aniston, and Jason Momoa for shows that will debut at launch. That's it from us this week. Make sure to follow along with all of Forbes coverage at Forbes.com and reach out to us at #ForbesFlash. Thanks for joining us.